My name is Benjamin Karstens,
John Ferrer.
and we are doing our pitch on Tencent. So to begin, I just wanted to start with this quote from a famous family, the Rothschild family, is buy when there's blood in the streets. And we'll get into more about what that means as we go through the pitch. So our recommendation obviously is a buy, because it's not currently in our portfolio. And the current price is selling at $37.15, but due to a lot of factors, we think that that is not just low, but like very, very low. So we set a target price of 94.83, and as you can see on our holdings paper that we did a future cash flow to equity and a relative value for price to equity and relative value to the price to future cash flow. And we weighted it based on where we thought the price should be, so we didn't think it should be over 100. We think that that is too much, but
Given the whole market has to be a little more risk to it, so
yeah,
that's why.
because this is a Chinese stock, so we understand there's a little bit more risk, especially right now with what's happening with all of the news, and we'll get more into that later as well. Target price of 94.83, 52-week high, 52-week low, as you see, is the 61 and the 34, but we think this company has a lot of potential. So average volume, over 6 million, beta, these are all of our metrics. So just want to go over those real quick. So if you want to go into what Tencent is.
Alright, so what is Tencent? Tencent Holdings is a Chinese company that, when it first made, it was originally a video game related company, so most of its revenue came from video games. But as time went by, they diversified into other sectors as well. And right now, Tencent is one of the biggest companies in the world, and it's currently at the 8th position as the biggest company in the world. And it's, I think, the 6th in terms of revenue in the internet side of things. And although it originally started as video games, like I said, they've been quickly diversifying, and as you can see here, their VAS represents 57% of their revenue, so 34% of them is from video games, 23% of them is from social media, 19% of them is from online advertising, and 24% from other things, so it's very, very diversified.
Yeah, very diversified company. So we think it's a growth company, but it's very safe. But it's just in the Chinese market right now, which is why it's a little bit more risky. So we go into the stock performance. Yeah, if you want to go over the
Sure. So we decided to compare it with obviously a Chinese index, so which is the SC Composite SHCOMP, and basically it's an index of all the stocks that are traded in the Shanghai stock market exchange. When we compared it, the S&P Composite Index is down 29% from its all-time high in January 26, 2018, and Tencent is down 39%, so it's 10% lower than the index, which, based on our thesis, is actually a good thing,
yeah,
which we'll be talking about.
What exchange is the ADR listed on, though?
we have it compared to the S&P 500 in the next slide.
Yeah, but I'm just asking what exchange does the ADR actually trade on?
The Shanghai stock market, made SH.
So the ADR is the American listing, because we can't buy something
sorry.
on Shanghai.
It's in NASDAQ.
Yeah.
Okay.
Yeah. So we wanted to show you kind of what the Chinese market looks like right now, and we all know that. So the S&P 500 is this light blue line, and the technology sector, information technology sector, which is our sector, that's this dark blue line up here. So the IT sector is doing very well in terms of here, but as you can see, it's going up, and we've all talked about the market cycle quite a bit in this class. If we want to use that as just something to think about, is that this company is kind of going down, but if we look at the financials, which we'll get into later, they're very strong, and they're showing lots of revenue growth and gross margin, stuff like that. That's still growing. It's just due to noise in the market. That's kind of why it's driving the stock price down. We think that it's going down, but it's going to shoot back up. So now is a really good time to buy. Go for it.
Alright, so there are three main reasons why we think Tencent's a buy. The first main reason is that fundamentally Tencent is a very strong, well-diversified company with the numbers and information to back it up. Number 2 is that the stock value has been crashing due to China's recent market noise. And in the short term, this may look bad, but in the long term, it honestly makes it even more attractive investment. Number 3, they constantly look for alternative growth strategies and effectively use their advantages, their dominant,
Sure.
yeah, stature to help them expand to other industries, kind of like what Amazon does to a lot of
So we want to look at their fundamentals. So if we look at their revenue over these last few years, trailing 12 months, it's just increasing. So we have, as far as year-over-year percent growth, we have 56.48%. We don't think that that will be sustained throughout the like the next 3 years or so. So when we did our intrinsic valuation, we changed the growth rate based on that for our target price.
minus 4.5%, just to make the stock price go.
Yeah, per year. So we were like,
And it's still really high.
it's really hard to sustain a 56% growth. So we were like, we just want to, keep that in mind.
So that's a 1-year growth rate. Did you look at the growth over several years? What has the growth been, what is the growth trajectory?
It was honestly pretty close to the same. It was around averaging around 40 to 50%.
Yeah.
So it's still pretty, like it started from a startup 20 years ago, and now it's the 8th largest company. So the growth is definitely.
Yeah, and growth has been constantly increasing. So yeah, and then earnings per share, as we can see, these metrics are continuing to grow. And we think that the reason why the trailing 12-month metrics are like slightly lower is just because of like part of our thesis is the market noise. So if you look at our thesis is the market noise drives stock price down and makes long-term investment attractive. So I just want to point that out. Yeah, if you want to go into this.
So when we say diversified, we really mean diversified. So obviously video games is still their biggest one, not by a long shot, but it is their biggest sector. So right now they own Riot Games, which owns League of Legends, Supercell, Clash of Clans, and all that. 40% of Epic Games, which owns Fortnite, and they have multi-billion-dollar stakes in Activision, Blizzard, Ubisoft. Like they own, I think, 5 to 10% of each of these companies. In social media, more than 2/3 of Chinese people use Tencent's apps, which is WeChat and QQ. They have if you combine both of them, over 1 billion daily active users, and it's been growing in a steady pace.
Question on the video games from someone who's not a gamer.
Sure.
Are we talking about games like Angry Bird style
Oh
games
no,
or like?
it's diverse from mobile games to like esport related stuff.
Okay.
So if you know anything about video games, you know these are actually the most popular. We'll be talking about more about it, but it's probably the most popular.
Like Activision is one of our comps
Yeah.
to this company in
Yeah.
general.
Okay.
So
In terms of e-commerce, they also own 17.5% of JD.com, which is an e-commerce. Basically, it's the Amazon of China, and it's directly competing with Alibaba. And so it's in terms of revenue, they're actually the 3rd largest internet company in the world right now. Music streaming, we have Tencent Music, which we'll be talking about a lot more later. But right now, it has 17 million active users and 120 million paying subscribers, which is, I believe, like comparable to Spotify. And not to mention, they also own 9.1% of Spotify.
yeah.
In payment solutions, they also have WeChat Pay, which they directly combine with their WeChat service, and they have like 300,000 offline stores, which accepts this as a payment, and it's been growing as well. Music distribution, they have direct ties with Sony, Warner Music, and Universal, which will be important later as well. And then they also have film production, so if anyone watched Venom, or I think Wonder Woman as well, a couple more big names, they were also big producers for these really popular movies.
Alright.
So so Tencent has invested in more than 600 deals as of 2018, and they have a lot more. That was just the biggest ones, but they also have a lot in cloud storage, instant messenger, search engines, and all that.
Yep. So comparable companies, we have why we chose each company on the next page here. So we chose Microsoft and we chose Alibaba, not because they sell the same sort of things, but they are large conglomerate companies that have similar metrics and market caps. And so we wanted something that was kind of similar in that way. And so Microsoft is a US-based company and Alibaba is a Chinese-based company. And so we're using those to kind of compare them with with Tencent. And then Electronic Arts and Activision Blizzard are also comparable companies. So I wanted to point out that the price for all of these are substantially higher than the price of Tencent, and that is due to outstanding shares, because Tencent does have more outstanding shares, but these prices here are substantially higher than Tencent's, and Tencent has better metrics than companies like Electronic Arts and Activision. So yeah, as you can see, like, these are just some of the metrics we wanted to show you, and it's also on the page, paper that we gave you. So, highlights for the company. I just wanted to, again, show you the just basic information. This is also on the handout that we gave you, just to show that, you know, things are increasing.
I mean, I feel like if you show this to someone and say that just by looking at it without saying it's a Chinese company, you really think this is really attractive.
Exactly. So like we're saying, one of our strong points is their fundamentals, their revenues, their income, it's very strong. So that's like something we really wanted to emphasize. So again, more metrics, this is also on your sheet, so I'm just going to skip over it. So yeah, we also wanted to say that the value drop is due to the economy and government, not
You just
due
skipped
to...
over their entire balance sheet.
You probably want to talk about that.
Yeah, so tell me, I mean, stop and at least take a second to look at it and tell me that, okay, doesn't look like they have a lot of debt,
Right, very low debt.
okay,
Most of their business is done through e-commerce or online transactions and online companies. It's like a lot of their video games are online video games and mobile games, not like, but they do have other like disc games that you can go buy. So their inventory turnover is very low because they're very high because they're
they have physical inventory, yeah.
yeah.
No, just, so in terms of liquidity, in terms of like debt ratios and how they finance themselves, are they fairly comparable to the comps you've picked?
I would say
Yeah, for sure, definitely for EA and Blizzard. For Alibaba, it's mostly just because we wanted another Chinese company to compare it with. And for Microsoft, yeah, definitely because they have a lot of similar their sectors actually. Like for example, in video games, Microsoft also has a lot of their revenue also comes from video games, from Xbox. So yeah.
so. Yeah, they're. Yeah, I think that went pretty well. So we wanted to talk about how, like, what we think about the drop in their share price due to the talk in the market. So yeah.
So the three biggest reasons as to why Tencent's price is falling lately is because of the China-US trade war.
How does the trade war affect a company that doesn't sell physical products?
Yeah.
Most of their customers are Chinese.
It actually, it's mostly just a scare. I'll be talking about it a little bit more after. China's regulation of video games and the fall of yuan. And so to answer your question, basically, a lot of analysts are saying that it's dropping not because, like for example, Tencent, Alibaba, they're Baidu, the three biggest Chinese companies, don't have nothing to do. They're not really getting affected by the tariffs and stuff, but they're still dropping a lot because a lot of investors are worried about the Chinese market right now and as a whole. So they're cashing out their money and investing it in safer investments, which in the short term makes sense, but honestly in the longer term it actually makes it for a more attractive buy. Yeah.
So I was reading about this before I found out you guys were going to pitch it. They were saying that it might not recover for up to 10 years. Some people are saying. So
I mean, some people are
do you
saying
disagree with that, or are you planning on holding it? For
I
10
definitely
years?
disagree with that
Yeah,
for sure.
I
Because like there's no,
Yeah.
I want to know like what made them
Why
say
do
that.
you disagree with it?
I mean, like, why? How did they say 10 years? If you look at their fundamentals and the way the Chinese market's working right now, it's not like I mean, analysts are saying that there's still gonna be a 6% growth in China for the next 5 years. So even though the Chinese
that's the
market's
projected
dropping,
growth.
right, projected growth, even though it's dropping right now, the stock market's dropping, but not necessarily China's economy itself. So it's not like, I don't know, you could send it to me, maybe after I'll take a look. But
There's a lot of analyst reports that are saying that it's not going to be like like this negative like government like this downward trend of the Chinese commerce or whatever. People are saying it's not going to be constant, and people are saying it's going to last 10 years. So it based on
Oh, you mean
the
the trade war? I think that's what you mean, right? The trade war is gonna last for more than 10 years. That's I think Jack Ma, the owner, the CEO of Alibaba, I think mentioned that. That's probably why. Yeah. I mean, a lot of analysts are saying that it could be true, but I think it's mainly just gonna be tension, but not necessarily a full-on trade war for 10, 20 years. I don't see that.
so regulation on video games.
So, number 2 is China's regulations on video games, and this is another reason why it's been dropping a lot lately. Is because, well, historically, when you release a game in China, there's a lot of required like verifications and approvals to be able to sell a video game in China. Now that may seem like a bad thing, but it's actually a good thing for Tencent itself because they get to monopolize this licensing. They really do. So it may seem like a bad thing, but it actually isn't. It isn't for Tencent themselves. And given China's history with liking their big companies, they want, given that they're a communist country and stuff, they want their big companies to do well, and it just makes sense. But lately, since March, China's been a little more strict because of their shake-up, which I really don't want to get into. But yeah, that's one of the reasons why Tencent stock has been dropping. But in the long term, I don't think this regulation thing would last for very much longer. It's just one reason why.
And then follow the UI. Yeah.
Okay, then to follow you on, there's a good quote that I saw from Seeking Alpha, and it talks about this whole situation, that the devaluation versus the dollar will be a good thing for Chinese exports, but it will be a negative impact for Chinese companies that are available on the American stock market exchanges and reporting dollars on Tencent. These companies might miss their analysts' targets and their stock prices fall because of the sentiment and confirmation, but this mechanism can create opportunities to invest for the long term.
So GDP growth. So this is something we want to show you, is that the GDP growth for China is substantially higher than the GDP growth for the U.S. And that's something we found. It's projected to kind of stay at a constant rate of growth, is what we found. So we thought that was interesting, and we, so yeah, that's where it's projected to go past 2022. So this is just the management governance that the company has. So the CEO and management in here, they brought this company up to like the 8th most popular or biggest company in the world within the last decade or so. 20 years, couple decades, yeah. So the management and it's sound, so we wanted to point that out as well.
You probably want to talk about this one.
Oh yeah, so they're starting to buy back their own shares because they are confident in the fact that their price is going to go up as well. So they're confident in their own business structure, and just like we are. So I just wanted to point that out real quick. And they're interested in alternative growth strategies. So like their diversity and all the different areas that they're growing. We want to just point that out real quick.
Oh yeah, so let's go to the next slide.
Yeah, I'll go to the next slide.
So basically Tencent's been, like I said, diversifying to other, kind of like what Amazon's doing, they're diversifying to other sectors. And one of the biggest ones that I feel like is going to be a big thing that not a lot of people are talking about is that Tencent Music is actually about to make a spin-off, US spin-off, an IPO of their Tencent Music, which is super popular in China, and they're about to do it in the US. And basically Tencent Music is the mix of Spotify and Twitch, which is the most popular music streaming and video game / live streaming services. And the reason why we think that this is going to be a big thing is because they can easily compete with Spotify and Twitch because of their size.
So how does that benefit Tencent if you're pitching Tencent the stock and they're spinning off Tencent Music?
Well, sure, but the profits will still be, I mean, like the more people use Spotify Music, Tencent Music, the more people will be likely to use other Tencent products because they're going to be easily be able to incorporate each other, which I think they will, given these guys.
And there was something about if they, take control of the music and the game streaming, then they can require that like their games cannot be streamed on Twitch. So the people that stream the games that they like to play, like Fortnite, which is very, very popular, then they can only stream it on this company. And so then they will switch to this company. So that's kind of where we're going with that as well.
Like the 3 most popular video games that are being streamed on Twitch right now are all partially or fully owned by Tencent, and they have like full control over these guys. So that's another good thing to know.
And so, again, the only investment risk that we could find is that just the current Chinese economy is declining and there's no guarantee it'll stop anytime soon, but we're talking about a long-term investment. And we just put this here to show just like the different gaming companies that they acquired over since 2011. So these are very prominent gaming companies that have a lot of different popular games about them that they were acquired by Tencent. So this is just additional catalysts and news, and we just want to say the falling trend is bound to stop, and we can't predict the market, but it doesn't matter. We're talking about a long-term investment, and we think that the market is going to turn and start to go up, and with the low stock price that it currently has, we think that it'll start to increase in price, and we'll make money off of that. They're fundamentally strong, they're innovative, and they're diversified. That is.
So what were the assumptions that went into your valuation? Because you didn't really spell those out.
Yes. So, like the beta we used in.
Yeah, you should have the growth rate, you should have the discount rate you're using, so the cost of equity, if you're doing free cash flow to equity, that should all be stated here.
What
Yes.
template do you use?
I have that written down. I don't have it here. I can open it up
Okay,
and look at it.
Yeah.
That's something I totally forgot to put on this presentation.
okay. Because we need to know that.
I
to
can
kind
follow up with that.
of Make sure that your valuation is accurate. I would expect if you're pitching a gaming company that you have something like monthly average users, especially since they do a bunch of like mobile gaming and online.
We could look into that. Problem is that like they have a lot of video games, like hundreds, so it's gonna be hard to. We can do it separately. Maybe we can check out the biggest
Did you
ones
look at their financial filings? Because I just pulled up so they don't file a 10K since they're an ADR, but they file essentially the equivalent of one, and so they file with the SEC and they talk about monthly average users in that report, so it's actually quite easy to
Oh,
find.
okay.
Perfect.
What about, so also quick Google search while you guys were talking, they recently restructured. And they're down significantly more than the market, so how can you contribute that just to market noise? Is there something else going on there that we should be aware of?
The only reasons why they're dropping right now is a lot of people are one of the main reasons why they're dropping more than the Chinese market is the whole video game thing that I mentioned a while ago. But a lot of people are saying it will last like 4 to 6 months, which is kind of like, I guess in the short to mid-term it kind of could be a long time. But in the long term, like I said, I don't think it will definitely shoot up back in price once this whole thing will.
I'd probably want a more detailed explanation of
So-
exactly what's going on with,
Okay.
with regulation of video games.
Sure. So right now, the Chinese market Chinese government is kind of worried about about video game addiction and how these companies are basically monetizing video game addiction. I mean, they've been doing this for the past 5-6 years, and they've been so it's not like it's a new thing. It's just more strict now, right now, because of the whole shakeup in the Chinese government recently. But this whole thing has been going on for years, and it hasn't really affected Tencent in a negative way. It's just in the short term, they're just more strict than usual, basically. And I don't think this will happen. Like I said, like analysts are saying, this will happen just for 4 or 5 months, or 6 months, yeah. But it's not a new thing, the video game regulation thing. It's just more strict in the short term, since March to 6 months from now, basically. So for this past year, for a year.
So you expect regulation to be lifted?
For sure, yeah.
Yeah.
Okay.
It's not a permanent thing.
I would have liked to see maybe Baidu and TikTok, which are two of their Chinese competitors, or two companies that are often cited as comps for them, also included in your comparables.
Okay.
Isn't TikTok like a music streaming, live streaming thing?
They do like streaming video, but
Yeah.
apparently they're viewed as quite a significant threat. I just sent you guys an article from the FT, so that might help you.
Sure. We can take a look at that.
I'd like to see some more operating metrics. So you guys have really focused on their video, their like gaming aspect of their business, but their revenues are quite diversified. So it would be good to kind of think about their whole business model.
We actually did a look, and the reason why we didn't talk about it is because it's doing really well. Everything aside from video games, that's why I actually didn't get to mention it, is that even though their revenue from video games is actually dropping this year because of the whole regulation and things, everything else is actually going up. That's why their revenue hasn't been dropping. It dropped like 4%, 4% lower, even though the revenue in gaming dropped more than that. But everything else has been going up, like their cloud streaming is up 94%, I think I put it there. So a lot of their the other aspects are doing well, and that's why we kind of wanted to talk about the video game, because that's the problem, but everything else is doing pretty good.
Okay, bring in some data to substantiate
Sure.
that next class. Like,
Okay,
I mean,
sure,
I'd
yeah.
like to see like all the other divisions and specific growth rates for every single other aspect of their business, okay?
Sure.
Questions from the class?
I just had one. Yeah, you guys mentioned value-added services, VAS.
Oh yeah, VAS is basically
What
just,
was that?
yeah, it's essentially just like let's say you play a video game that's free, and you buy like an add-on to make it to inside the video games, like in-game kind of thing. It's basically just added inside the actual product. So like in this case, it's just video games and social media. So like in social media, they have like extra. Hey, you can like gift stuff in Chinese social media, which is a big part of their revenue. So yeah, it's just added stuff to their apps specifically, just
Okay.
revenue for their apps. Yeah.
Pull that screen back up. How
Yeah.
much was the percentage on
57 if you add both of them together.
that? What do you
One of the first slides, like the one with the green puzzle.
And do you remember if they broke that down by sectors?
Yeah,
Like if I
34% of the VAS of the 57 is from
Okay.
video games, and 23% from social networks, which they're
Okay, that's
WeChat.
Okay, so is the VAS declining it?
Or
From
is
their
it
video games also,
Got it.
since the video games are going down as a whole, is the value added going down, or is just sales of actual games going down?
their VAS is actually quite the same. It was like
Okay.
59% in 2017.
And we'll get information to back that up.
Yeah, we can get information back up. But yeah, their video games, I think, was like around 39 to 41% last 2017. So it has been dropping a bit, which is expected in the short term. But it's another reason why that's happening is because the others are actually just going up. Like if you look back to 2015, I believe their video games was like at 71% or something like that. But we can talk about like the exact measures, but it was a lot. And then it's been diversifying.
Okay.
So we'll analyze each of these revenue streams and come back next class for a follow-up and show you the growth rate and where it's going.
Alright, that's one of the things the Chinese government's worried about. If they're worried about video game addiction, that's specifically the thing that they're talking about is paying for those extra, you wanna get your farm bill thing refilled faster, pay us $1.
Yeah, which makes sense.
That's
Yeah, for
exactly
sure.
what they're talking about. That's why I'm asking if that's going down.
Yeah.
But like you said, it's not really. it's still 34%, but it's definitely been diversifying further. And they've been looking at going into more things like the US IPO, music and stuff like that. So it's not like they're just focused on gaming. So like, it'll be a worry for sure, but not like, it's not like, for example, Facebook, where 91% of their revenues are from advertisement. So it's like, you know, it's not like you have to be super worried about it, but obviously it's something that we have to be cautious about. Consider, yeah.
It also looks like they've gone on a buying spree lately. You said they acquired quite a few companies. Is that just all recent in the last like year or two, or how
Well,
long have they?
I only put the ones for just their gaming companies.
Well,
Yeah,
the question is more,
Yeah,
so when a company grows by acquisition as opposed to organic growth, I would like to see maybe a pattern of successful acquisition, so I don't know if this is a newer buying streak they've been on. I don't know, also one thing you can check is look on their balance sheet and see if they've had to impair goodwill, because that usually indicates that they've had to write down some of the amount that they paid for some of these acquisitions, and it shows that maybe they didn't deliver the value that they thought they would. So just how good is this company at integrating acquisitions is a good question, since they seem to be growing through acquisition as opposed to specifically, well, it looks like they have organic growth as well, but they're on
It's a
acquisition
bit of
pair,
both.
right?
So we can analyze the revenue streams and their recent acquisitions in 2017 to 2018.
And then last point, is you had a chart that showed GDP growth in China and in the US, and basically, depending on what year you pick for like a starting point, sometimes I find those charts to be really misleading, especially because Chinese